Picture this. You settle down in front of your PC, ready to do a little analysis for the day. You have taken a look at the graph and have seen an agreement with what you expect to see when the manufacturing PMI comes out in 8 hours. Around that time though, you will be wrapped in a serious business meeting and you will not be able to place the trade then.
What about this? You take a seat in front of your PC and smile as you see gold dip a little more as the day progresses. You're quite sure it will drop a little more, and due to your technical analysis and fundamental know-how, you believe it will reach a low of 1291.00 before strengthening again. You aren't sure when, but you anticipate it will be before the close of business at 5 p.m. South African Standard Time or 6 p.m. server time.
What to do? What to do? If you're anything like me, you will start brainstorming or inventing a functionality that will allow you to place trades in the system that only execute at a desired price and or time. Unfortunately for the both of us, MetaQuote was miles ahead of us and built the pending order functionality into MT4, so if you want to place such a trade, you will be able to do so as easily as instant execution.
By definition, a pending order is the client's commitment to the brokerage company to buy or sell a security at a predefined price in the future. This type of order is used for the opening of a trade position provided the future quotes reach the predefined level. Now, there are 4 types of pending orders available in the terminal. Let's say you can see the price of a certain instrument climbing. You expect it to continue to climb, but you're not sure how far up it will go. With the help of good analysis tools, you come up with a strong resistance level. You decide that if the price reaches this level and breaks through it, you anticipate a strong bullish force and therefore you want to place a buy trade. In such a case, you will want to place a pending buy trade above the current price, and this is what we refer to as a buy stop.
If you are observing downward movement of the price and expected the price to continue in such a fashion, you might use support levels. To help you decide how far down you expect the price to go, for example's sake. If you then decide on a strong support level and say if it reaches this price below the current price, you want to effect a sell trade, this will be a sell stop.
So let's say you see the price is climbing. You expect it to change direction at a strong resistance level you found using reliable technical analysis. You may want to place a pending sell trade at this price above the current price, so that once it is reached, you can sell the instrument and profit from the anticipated downward movement. This is what we would call a sell limit.
Now, if you witness downward movement for a specific price and you anticipate the direction changing and the price appreciating, but not as yet, you might want to place a pending buy trade below the price so that when the price drops to the point you anticipate the change in direction, a buy is effected. This will be a buy limit.
So, just for memory's sake, above the current price, you can only set a buy stop and sell limit. Below the current price, you can only set a sell stop and buy limit. Another way to remember them is by keeping in mind that the limits change direction and the stops do not. If all else fails, take a look at your chart. If you click above the current price and opt for trading, you will see the sell limit and buy stop options. Depending on where on the chart you clicked, the price will be fixed for the pending order, so once you click it, you get that exact price. If it isn't your desired price, you can amend it in the terminal below. If you click below the current price, you will get the buy limit and sell stop options. In the new order window, you can opt for pending order and pick the appropriate one from the drop down. If you use this method, make sure you know the price and that it is above the market price or below the market price for the buy stop and sell limit, or buy limit and sell stop respectively.
Let's set a buy limit at 1.67583 for GBP USD. Notice the option to add an expiry date and time. This allows you to delete the pending orders at a certain point in time once you believe the conditions in the market have changed, and placing the order after that might not be the best idea. This could be in connection with an announcement that is scheduled for an economy, for instance. Here, you can set stop loss and take profit along with the pending order as well, because the pending order is set at a predetermined price, just like stop loss and take profit. Let's place a stop loss of 30 pips and a take profit of 60 pips. Let's place a sell stop. We will place it at 101.723 for USD JPY. We will set it to expire today at 23:20. If you do not set an expiry, the pending order may stay there indefinitely until the price is reached. We will place a stop loss of 20 pips and a take profit of 60 pips. Thanks for watching.